So welcome back to the final discussion of the day at FinTech Festival India, everyone. India is one of the most affected countries from the coronavirus, a massive 45% economic decline in the 3 months between April to June 2020 and an overall 23.9% contraction in GDP. In order to get back to growth, the role of medium, small and micro enterprises is very critical. In the US and other European countries, trillions of dollars of loans have been provided to small businesses by the governments to keep the small business afloat. Is lending really the backbone of FinTech and the growing economies around the world? Could FinTech ecosystem be as big as it is today if it weren't for lending? So discussing this really pertinent question, our next panel on FinTech without lending, is it viable? Is moderated by Chirag Mehta, partner, Clip Financial. Chirag is joined on this panel by Abhishek Kothari, co-founder Flexi Loans, Ashish Anand, Chief Executive Officer, Whrrl, Iyer, founder and CEO, Vayana Network, and Sonal Kapoor, Director Financial Services, Flipkart. So over to you, Chirag.
Thanks, Gitanjali, for this very quick introduction. First and foremost, let me welcome everybody, all the audiences on this panel. We have a fantastic set of panelists with us today, all from the FinTech industry, some of the leaders and titans of the industry. So I hope, and I'm very sure, in fact, we'll have a very fantastic and fascinating conversation, right? Now, FinTech as a sector raised almost $7 billion last year in FY21, right? This was across 200 deals. Out of those 200 deals, 70 deals were FinTech or lending based. And almost $1 billion were raised for those 170 odd deals in the FinTech lending ecosystem. So, there's no surprise that there's so much chatter or conversation around FinTech lending and hence this panel. So we hope to have this conversation with all the leaders that we have in this panel and perhaps explore various facets of the FinTech lending ecosystem. So let me start by quickly introducing myself, and then I'll quickly move to the panel and we can get into the conversation from that point onwards. So I am Chirag Mehta, a partner at a boutique investment bank called Clip Financial. We work with startups, mid-market companies, helping them in their corporate finance requirements. What that essentially means is that we work on funding, fundraising, M&A, advisory services, so on and so forth, right? So I'm also a FinTech enthusiast, and hence I am delighted to be moderating this panel today evening. So with this and without any further ado, let me quickly jump to the panel and let me request the panelists to quickly introduce themselves, their business, and then we can deep dive into the conversation. So Abhishek, perhaps you could start with a quick introduction and then you can take it from there.
Sure. Thanks, Chirag, and thank you for having me on this panel. So a quick background about myself. So we started Flexi Loans back in 2016, the four of us, and 4 MBAs trying to do different things in our life in financial services. And that was a time when really a lot of things were coming together in terms of Aadhaar, internet, smartphones, etc. And that was a time when India saw a lot of financial services, FinTech ecosystems developing, and lending was one of the big things, continues to be. So we specialize in MSME lending, and from trying to figure out what MSMEs need and different kinds of products, from a term loan to a line of credit to invoice financing to buy now, pay later. The industry has moved, and so have we. So today, 6 years later, we specialize in embedded finance. So we work with ecosystems across the country who have an MSME base and want to offer lending as a value-added service on top of it. And our proprietary infrastructure allows us to effectively originate from these ecosystems, take risk, understand risk exposures, proprietary risk models, and then the co-lending infrastructure, which allows us to now pull in capital from not just our own NBFC, but also a series of banks and NBFCs. So this entire infrastructure is what now Flexi Loans is. We do about $15 million of lending per month now There was a day when we celebrated our first 1 crore of lending back in 2016. So long journey, but still I think a long way to go.
Fantastic, Abhishek. That's great to hear. From 1 crore to $15 million a month. That's quite a journey, and that's just the start, I'm sure, is how you feel about it. So next, Ashish, right? Founder of Whrrl. Ashish, you have been able to take blockchain, agriculture, finance, warehousing, some of the hottest topics that are trending right now, and create a business around it. So why don't you introduce yourself, tell us a little bit about Whrrl before we deep dive into the conversation and understand more about how you are approaching this entire space.
Sure. Hey, hi, Chirag. Thanks a lot. And hi, everyone. I'm Ashish Anand, co-founder of Whrrl. We started a blockchain fintech when Web3 was yet to become a word, and blockchain was still something not really many people were talking about, or it was still a pariah in some sectors. So, but that has helped us today after almost 3 years to create the only block fintech in India that runs 100% on blockchain rails. And we have been, as Chirag mentioned, we have been using blockchain to fund the farmers in the agriculture supply chain. Using tokenization properties of the blockchain. We are on one of the largest tokenization platforms across the globe. We have tokenized more than $500 million worth of, almost 5,000 crore worth of assets on our platform. We started lending last year, and that has been going good. Now we are looking to add a decentralized finance to this protocol using the global crypto capital to help the agriculture supply chain and other supply chain players into the ecosystem. So we will be talking about that pretty soon over this panel. Thanks once again. So Chirag, over to you again.
I think Chirag should be joining in back soon, but maybe we can just continue with the introductions.
Yeah, sure. Why don't I quickly go ahead and introduce myself till then? Hi, everyone. I'm Sonal. I lead financial services for Flipkart. I hope most of you know Flipkart and you use it. So I'm not going to talk about that, but I'm going to talk about what we believe at Flipkart and right. As we continue to go deeper and deeper into the geography of this country, we strongly believe that by harnessing the power of digitization and platform, we can actually create new models of finance across verticals, simplify and improve access to affordability and financial services to our billions of users, right? And in order to sort of ensure that this goal is accomplished, we continue to work with a lot of partners in the ecosystem. And that's exactly why I'm here. I want to talk to you all about, how actually fintechs can do lending without lending. So we'll talk about it more, in the future segment. Over to you, Ram.
I'm so sorry, my computer crashed. In all its wisdom, Microsoft Office decided this is a great time for the Windows upgrade. So pardon me for that, but thanks Sonal for taking it further and introducing yourself in the meanwhile. Ram, let me take it from here. And before you introduce yourself, I have one question for you, right? You are the CEO of Vayana Networks. Now, Vayana Networks sounds more like a deep tech company as compared to a fintech company. So why don't you start by explaining why Vayana Networks and then talk about what we do at Vayana?
Yeah, sure. So, basically Vayana in Sanskrit, and it's not spelled Vayana in Sanskrit, but it's spelled Vayan, but it means weaving. And the whole idea really that we look at businesses and we look at supply chains. So when you look at supply chains, we find them all very networked. And especially in India, where we find that everybody is kind of connected to some other business. So in many ways, it's like a social graph. Businesses have a graph, and we want to kind of connect everybody in that graph. So I think that's really the word network. And of course, is to also ensure that there's a icebreaker conversation like this that we can have whenever we talk about the name. But very quickly at Vayana Network, I think what we really started off the journey as is to say that how do we kind of finance supply chains? How do we kind of take one buyer, many sellers, one seller, many buyers, and ensure that every member in the supply chain, right down to the deepest tier, can get access to affordable and convenient financing. It's been a kind of an interesting journey. We are at a point now, we are doing about close to $500 million of financing every month on our platform. We have done about, I think we're getting close to the 10 billion mark of total financing that we have done. But I think the journey has also been interesting because, we are kind of understanding a lot of perceptions and myths we had about India and financing the smallest companies is all kind of, not very true. And I think some of it I would like to kind of share in today's call. Great to be actually, Abhishek, great to meet you again.
Fantastic. So, taking the conversation further, Abhishek, why can you hear me?
Yeah, we can.
Okay, so Abhishek, why don't the space that you are in, business finance, right? It's a fairly crowded space, right? There are quite a few players in this space. So I'm very curious to understand, how do you keep your edge in such a market where there's so much competition, there's so many players who are trying to create products or lend to the same set of customers, which is the SME or the mid-market or the small businesses, basically?
Chirag, I mean, first of all, we have to realize that no matter how many number of players there are, this is a very, very large market. There are 60 million MSMEs in India, and all fintechs combined would probably not have given 1 million loans as yet. In the MSME space, I think the problem is not about saturation of the market or too many competition, or and Sonal would agree with me that they're always on the lookout for more MSME lenders to solve that problem. And and if you look at the lending space broadly, you'd have to define it into, break it down into distribution, risk, and capital. That how do you get access to customers, how do you assess them, and how do you fund them and service them for a longer period of time. And I think we as a country are at the early stages of solving these problems. Whether you use digital marketing as rails or ecosystem strategies or embedded finance or buy now pay later as an acquisition method, whatever it is, but it is still being formed. We are still innovating as a country in terms of what is the right distribution method, which is better than the DSA channels that have been existent in the country. While that is being solved through a variety of innovative approaches, the risk part of it is the most unproven part. It's almost that we are trying to understand the risk profile of a segment that has never been lent to before. And banking has been there for centuries, and there is so much of inherent wisdom, knowledge, understanding. While on the outside it may appear as not mathematically coded, and so there is not enough savviness of technology around it. But I think all of us are trying to figure out, as we go into newer customer segments, how do you understand the risk and how do you price the risk? Because that's where 8 out of 10 people in India do not speak English. There's all the exposure is in tier 1 cities, tier 2 and 3 are still waiting for that exposure. So the Bharat opportunity, I think, is very large, very untapped at this point of time. And then capital, of course. As a country, we've seen so many cycles in the last 5 years. Hum sabko bravery award milna chahiye. The ILFS, demonetization, GST, COVID wave 2, COVID wave 3. I think before a risk model, the 6-month cohort completes for a risk model, you're building another risk model. And I think I want to, at least the point of telling this is that the competition is not other lenders. The competition is this. The competition, how do you find risk capital? How do you find better ways to distribute credit? And how do you find better ways to get capital for that credit?
Right. So I would love to further discuss this with you, right? But would you agree that a large part of how you approach the challenges that you outlined, is it through processes, is it through technology, or is it just through perseverance?
I think it's a mix of everything. Now, depends on the segment that we are after. If you have to do home loans, you can probably have less technology, more process, and it's not a risk problem that you're solving. It's a distribution problem that you're solving and a capital problem that you're solving. In our segment, particularly in the MSME, I think it's a mix of process and technology. And process simplification is actually very, very underrepresented in conversations. We talk about experiences and we talk about if you break this segment down, there are people who are time sensitive, rate sensitive, experience sensitive, value sensitive, whatever. But almost everybody is looking for that buying experience in borrowing. So technology is key to create that buying experience. And again, all of this we've learned from the e-commerce. We've learned from credit cards that how something happening in the background is the right thing for the product to scale. So for us, it's primarily about process and technology. If we can get that, it leads to a great customer experience. If it leads to a great borrower experience, then you've figured out a product market fit and unit economics will follow, even if it's not there on day one.
Absolutely, couldn't agree more. So I'm going to quiz you more on this once we come back to you, but let me move ahead on the next panelist, and we'll touch a little bit more about process and technology and how you implementing it in your business going ahead. So Ashish, tell us a little bit more about how you're using blockchain in giving loans, agri loans, right? I mean, you're dealing with a farmer, right? Because you're giving agri loans, and you're talking about technology like blockchain, which even a suave, sophisticated Indian finds difficult to put his head around. How do you, manage to pull this off?
So the key is, of course, to not the users talk about the technology. Rather, as right now, Abhishek mentioned that we talk about how do you run the processes of the technology, because buying comes in from there. So it's the user experience which we talk about. So when we talk about farmers, what we did very simple thing. We made them to get a loan at the moment they bring their commodities to the warehouse, as simple as that. So the farmers don't have to worry about whether it's a blockchain on which the rails are running. We even made a provision that if a farmer don't have a mobile phone, still the digital experience doesn't go away. So we made a provision that in the warehouse, we should be having a kiosk where the farmer can use for the purpose of borrowing money from the banks without any need of visiting the bank. What happened that typical lending cycle where we use warehouse receipt finance means the commodities are deposited, used as collateral, and the farmers borrow money against that. So that typical lending cycle in that is around 15 days. By bringing it technically in the warehouse itself, we reduce it to 15 minutes. And that's what's changed. So whether on the back end, whether we have as I mentioned, it's not about what we are running on the back end, whether it's blockchain, which helps us to digitize and create tokenized warehouse receipt. Rather, it's about how do I give that consumer lending in his hands on his fingertips or something like that. So that helped, actually speaking.
So you talked something very interesting. You said that you use blockchain to tokenize the lending receipts. Those were the exact words you used, right? Now that's a lot of tech mumbo jumbo. And can you de-simplify it for us and explain what exactly do you mean by this? Why do you need blockchain in the first place? This is really the question that I have.
So let me take the second part first. Why do we need blockchain? A simple aspect of blockchain is what we call decentralization, right? I call that disintermediation. Means if you are able to remove certain intermediaries from the ecosystem, that is what decentralization is. That is what we did with blockchain in this special use case of warehouse receipt finance. We connected the supply chain players like warehouses and the banks directly without need of a third-party data system. So you can do that in the Web2 technologies with the help of a deposit, like we have Demat accounts in the share market. Here also you can have a Demat warehouse receipt through a Demat channel. So what blockchain does that it eliminates the need of having that sort of a third party, and that's where we bring the blockchain. With that, the security and other aspects of the blockchain are an added advantage for the banks, the lenders. Second part is that then you have smart contracts, which make this lending within a few minutes possible. So that is why we use blockchain. And in my opinion, it is very important to understand where you want to apply blockchain. Otherwise, the success has been far and few in this industry so far. So that's where we brought this to remove the intermediary from the ecosystem. Now coming to the mumbo jumbo about tokenization. So see, the idea is very simple. A paper document, like say, for example, your house property, the home you are sitting into, the title deed of that is recognized by a human body. I can look at that, I can say it belongs to you. The blockchain doesn't recognize that. So you have to tell the blockchain that this house property belongs to Chirag for certain region and for so many years and so on and so on. And that's where we use the concept of tokenization. Means actually tokenization is representing something in the form of a language which blockchain understands. So you have non-fungible tokens, NFTs as a craze, where digital art has become a token on blockchain. You have money like Bitcoin, which is essentially a token on the network. And the third part is, so any asset, any property can be tokenized in the similar fashion. And that's what we did, that when commodities are deposited, we create a digital version of that commodity deposit, which is readable to the blockchain. And that is known as a token. And that's why we call tokenization.
Wow, that was fantastic, very fascinating as well. So I'm going to pause you a little bit more on this going ahead, but let me move to Sonal for the time being. So Sonal, a lot of what you do at Flipkart in terms of financial services, right, is about enabling your customers to get access to capital, finance, loans, etc. Right? Everybody seems to be talking about BNPL these days, right? It's pretty much the rage of the town, at least in the financial ecosystem. And I'm sure you at Flipkart also have a BNPL kind of a product or a service, right? So help us understand, why is BNPL so popular right now? A, B, what is the customer thesis around which the entire product has been developed? Why does a consumer want to actually engage in a BNPL kind of a transaction? So just throw a little bit more light about your thesis around BNPL, whether it's growing, it's not growing. What are you seeing at Flipkart with the benefit of thousands and millions of customers that actually consume and interact with Flipkart on a monthly basis?
Sure. First of all, Ashish, again, very interesting stuff. I think every time I hear you, I start reflecting back on, how would it really look like? So extremely interesting stuff again. But just quickly jumping up to buy now, pay later, right? And I think before we maybe just talk about buy now, pay later, let's actually take a step back and talk about these digital platforms, right, that exist. There's Flipkart, there are the likes of PhonePe. There are many more merchants who are doing some great work. And as consumers, we go to these platforms and we continue to spend a lot of time on these platforms, browsing, buying, playing games, maybe just sort of, doing the live commerce thing. So a lot of these things are happening on these platforms. And now, and there are these segments of customers that have evolved on some of these platforms, and therefore their expectations from these digital platforms are slightly different, right? They are a lot connected to these platforms, and therefore their expectation is that a lot of their needs, now whether that is about credit, it is about delivery, it is about experience, selection, whatever it is, they want these needs to be fulfilled much more deeply. And at the same time, on the other side, there are these digital platforms that have extensively deep knowledge of these customers. And at some point in time, I think all of them have realized that they can actually foster innovation and they can play a pivotal role in the distribution of financial services to these customers, right? So that's how customer and the platforms are sort of coming together now. And now let's just move towards buy now, pay later. Frankly, if you ask me, I don't think buy now, pay later is a new concept. I think it was always there. It was maybe called something else. But what has changed is the leverage of technology into the financial segment. And therefore, there is this new product called buy now, pay later that has come into our lives. And all of us are liking it now, whether it is for the purpose of convenience, whether it is for the purpose of credit. I think it's working extremely well. If I take the lens of a merchant, right, and at that point in time, a merchant is able to actually empower its customers with a very minimal $100 postpaid service by integrating it into a consumer's customer journey. I think it is a win-win situation for the merchant. The merchant therefore is able to literally remove a step in a consumer's buying process, and is creating an interface that is making the purchase extremely easy. So therefore, it's definitely important for the merchant. What that means is that suddenly, if you're Sonal and you're going to Flipkart and you like this T-shirt, you just say, you click on buy now, pay later, and that's it, right? You don't have to do anything else. No card details, no UPI handles, nothing. And what has happened is that because of this sort of behavior that is getting inculcated in the consumers, this means that from a merchant's perspective, I'm going to suddenly start seeing many more transactions from the customer. much more spends from the customer. The loyalty of the customer towards the platform continues to increase. And these are some of the metrics that almost all of the digital platforms will track, and they will see a goodness in it, right? Just to give you all an example, for instance, customers that actually utilize instruments like buy now, pay later on e-commerce or shopping platforms actually have an 80% lower churn rate than others, right? So there are all of these goodness that starts cropping in because the customer is essentially now using you for the purpose of purchase, and the final end-to-end process is also happening on your platform, right? Customer is ultimately looking for a faster transaction and an increased convenience. And in some cases with buy now, pay later, as we try to go deeper and deeper into geographies, the fact that this is also the first form of credit is like a boon for the customers, right? It's an added benefit that otherwise they would have found it extremely hard, because if they were first going somewhere else looking for credit, that journey in itself, and we all sort of have seen how India fintech system has evolved, but the journey of looking for credit outside of the purchase process can be fairly tedious at times, right? So I think there is a merchant story, there is a customer story, and of course there are financial partners, right, who continue to sort of support merchants and customers in this entire story. And for them, it obviously again makes sense because they're able to really now acquire new customers at a much more low cost. They're able to acquire repeat transactions and repeat loans at a much more lower cost. And because at the end of the day, the consumers are related and linked to the merchant so closely, their ability to assess a customer or actually even collect the money from a customer is increasing multifold. So at the end of the day, what is happening is with this underlying product of credit and convenience, all the three pillars are actually getting benefited, in one way or the another. So that's how buy now, pay later is taking the world by storm, frankly.
No, I think this is absolutely brilliant, Sonal. You know, the way you have described the synergies that an e-commerce player is creating with its fintech ecosystem, with its customer, I think it's just mind-boggling. And I think the kind of data that you guys are crunching, there's a huge question or a huge cloud or a doubt everybody talks about, that buying is easy, paying is difficult. But you talked about the fact that there's one takeaway I have in this conversation. 80% of your customers that use BNPL, the churn is lesser, right? So essentially,
yep.
You don't have credit risk. In fact, they are becoming loyal customers for you, which is absolutely contrary to popular wisdom, which is brilliant. I mean, we're going to talk more about this in a bit, but let me get Ram into the conversation for the time being. Ram, so thanks, Sonal, for your inputs. Ram, so you have a very different kind of a business. You are in the supply chain space, right? And supply chain is a product that for a long, long time was being serviced by banks and large financial institutes to enterprises, large or medium companies at least, right? I think what you are doing very different and very unique is you're going to micro organizations, small companies, really, really small companies, and you're enabling a product of the nature of supply chain, right? And supply chain, mind you, is a very purpose-driven product, right? You know that what is the purpose, what are you buying, with whom you're buying, and that is what the loan is given for. So it's a slightly more complex product in that sense. So how do you enable at Vayana to scale up a supply chain as a business?
Yeah, so I think, if you just take the demographics, Ashish talked about 60 million or 50 million, what would be the number of enterprises? I think micro enterprises are about 90% of it, right? Or 95% of it. And they're all subscale. So they are essentially less than 1 crore of turnover, most of them probably less than 10 lakhs of turnover. And to that extent, we also have this fundamental problem that most of them really don't scale up. So these small businesses, micro businesses, remain micro for their lifetime. The net margins in this business are very, very small. So really the way to kind of look at the challenge of going to micro enterprises is to actually figure out whether you can reduce the cost of credit far below the net margins that these businesses have, right? So, when you have a net margin of 2 to 3%, how do you kind of get the credit cost to be less than 1%? And because otherwise you're really kind of taking money off the table for these guys, and they are going to have no incentive to kind of be in that business. And especially in supply chain finance, which is very short-term tender product, right? Typically 7 days to 90 days at the max. You really have to kind of make sure that the micro enterprise feels like coming back again and again, because otherwise the lenders lose interest. So if you take this problem of affordability, the affordability is actually with respect to net margins, not affordability with respect to the other lending options, first and foremost. So for Vayana, I think it has been very, very important to do actually tremendous amount of cost engineering for our lenders to kind of keep reducing their cost of credit. So we work with very large institutions who have very low cost of funds, and then hack away at the acquisition cost, the cost of servicing, the cost of default, to try and get them to that 12% or below mark. In fact, 95% of the assets we manage are less than 10% interest rates. So I think that's very, very crucial when you're talking about micro enterprises. The second thing to remember about micro enterprises, and that always worries me, I think in the longer term, is that most of them are actually not ready for credit. In fact, I have long held this belief that credit should never be frictionless. I think most enterprises should know what obligations they're getting into, know what they are signing up for. And that credit cannot be at a click of a button. It has to be really something that they need to think through. And with a lot of these micro enterprises, they are not at a scale or a size that they understand what they're getting into. And you really need to kind of do a lot of education there. So I think that's the second thing. Third thing is that a lot of these enterprises, if you just deal with this problem for the next 2-3 years or 5 years, I think Vayana will have a great time. We'll have growing at 10%, 20% month on month or whatever it is. But the number of small enterprises are not going to be different. And these enterprises are going to remain micro, which means that the loans we can give them cannot be more than, let's say, 1 lakh rupees over a revolving line of credit. How do we kind of upscale that? How do we get them to upscale their stuff? So I think the real important thing for me when you get into micro enterprises is not about really credit. It is about making them credit ready. It is about thinking about how they're going to grow their business, because otherwise, longer term, you really are going to have a very shallow pool of credit-worthy customers in India. We like the number 60 million, but actual number of credit-worthy customers that somebody is willing to give credit for and assume they'll get repaid for is very, very small. So you really have to figure out how the rest of these enterprises are really credit-enabled, credit-ready, and for that you'll have to do a lot of, I think, groundwork. And I think that's really at Vayana what's our next phase of really thinking through this problem is. We have, I think, kind of understood how to kind of give credit. We've understood how to kind of recover credit. We have understood how to reach out to these micro enterprises. I think the question really for us now is that how do we get these micro enterprises to start dreaming big, thinking of becoming small enterprises, the small guys to think of becoming medium enterprises. Because otherwise we are going to end up in a very, very shallow pool of credit. We are going to jump into the jacuzzi thinking it's the ocean and bang our head against the floor. We really have to think through this in a lot more, I think, structural manner than, as fintechs, we generally have obviously a quarter on quarter or month on month requirement. But to survive in the longer run or to create an institution, I think, and that's really what the Vayana journey is all about. Just trying to make sure that we create a very sustainable set of pool of credit-worthy customers for us. So I think that's
so a lot of contrarian thoughts, Ram, right? Because the entire fintech premise that we have built till now, or entire lending premise that we have built till now through Sonal or through Abhishek, who want to give loans as quickly as possible, right, at the click of a button, whereas you want to first educate your client and go through the process before you do the lending. So very interesting and contrarian thoughts. Abhishek, can you quickly come into the conversation? A very, very quick and small comment on what Ram shared, and then we will go back to the initial conversation that we had. So I know you guys are two friends, and I'm not trying to do anything with your friendship, but just a very quick comment on that.
No, I don't think it is contrarian. Actually, it's actually coexisting. I think it's essentially the need versus want, and a couple of points that I picked up from Ram is that I also agree to the fact that credit should not be completely frictionless. And by frictionless, I mean that the customer doesn't even know that they've taken credit. And that leads to unnecessary leveraging outcomes, which we don't want, etc. Although I do believe on the other part about the fact that there is a shallow pool. I think it's about there are segments that need education, and there are segments that need speed, and there are segments that need convenience. And they do not need to be overlapping completely. We've always found success in people who, as a fintech, for example, our forte is speed. And while believing that frictionless is not the right way to go, and so doing the right KYC, doing the right underwriting, but still giving it out at speed, which means building the right technology, purpose technology for that, has helped us. But at least I'm agreeing with Ram on most of the points about the fact that responsible lending is something that is not rewarded in today's ecosystem, and there should be a larger focus on it.
Excellent. So Abhishek, let's quickly go back to the conversation that we were at right earlier. Just if you could enlighten the panel, enlighten us, the audience, with respect to how do you use technology in your company? How is technology a big differentiator? What are areas where you're building the next leg of products within Flexi loans?
So look, technology, I mean, if you break it down, you use technology for speed, which is automation. You use technology for experience. And then you use technology for a kind of operational non-linear benefits. Now, there are some bits which are table stakes right now. Everybody needs to have a good origination and distribution technology so that they can plug and play into either ecosystems or do digital marketing, etc. I think the fun right now, and there are so many good partners that have come up in the last 4 years. I mean, when we started on this journey, on the first slide, we had proprietary technology stack because really there was nobody else who had that technology. But over time, I think there are a bunch of companies that have come up who are providing plug and play infrastructure for lenders to go live faster. And hence, I think the core piece of technology that we are focusing on is 3 things. One is that enables customer experience, which is in our control, where we don't depend on somebody else. So creating the right user experience and user interfaces, that's core to us. Second is anything that helps us understand customers better, which is data ingestion, data aware systems, pulling in data from 100 different sources, using it for underwriting, risk models, the whole analytics and data science piece of it. That's where we're focusing on because that's really the IP that a lender can create. And third is really democratization of capital. Because that's again where co-lending infrastructures, ability to take money from a bank balance sheet and fund a borrower on our origination system. So creating that unique experience across through technology is what we are focusing on. In terms of products, Chirag, I think the world is moving towards frequency building products. So loans as a category, giving a 5-year loan is not fun anymore. Or is not the in thing anymore. Everybody will make money on a 5-year loan only, but eventually I think the starting point of the acquisition is moving towards a high frequency, kind of low touch point, easy credit journey, almost like pseudo payments products. If you look at it, BNPL, embedded finance, they're all pseudo payments products, which is where we are today. We'll mature to, I think, longer term loans as the OCEN infrastructure or the account aggregator infrastructure kicks in, because that is when data becomes more available for larger exposures for longer tenures. Otherwise, unsecured will play in this space for some period of time.
Wow, very interesting. Very, very interesting. And I'm very tempted to ask you a whole bunch of questions to further this discussion, but I have one eye on the clock. And for that very reason, I will have to move on to our next panelist. But thanks so much for these inputs, Abhishek. They were really fantastic. So moving on to Ashish. Ashish, we talked about it, that you are now introducing decentralized finance concepts on the blockchain, right? You're giving NFT to your farmers, which they are now using to stake or lend, and they borrow on that NFT. So why don't you talk a little bit about what you're planning to do on DeFi? Because that is like next level tech, right? In the current context of where things are in terms of NFTs and decentralized finance.
Sure, Chirag. So if you look at DeFi, what has happened in 2 years? So from summer of 2020, I mean, it is 1.5 years exactly speaking, from almost zero to DeFi raised $250 billion at global exposure level, means that much loan they have given. We call it total value locked, but essentially that's the loan book. So if you look at that, if that can be the scale, but at the same time, what we have seen that the yield in those markets, in DeFi markets, have fallen down from like double-digit percentages to almost single 1% or 1.5% and so on larger protocols. On the smaller protocol, that may be still there, but the risk also profile changes. So what we see that there is a demand of yield in the global markets, and especially the global north, whether you have Europe or US and similar high high wealth countries where the yield has really fallen down. And at the other hand, we have emerging markets where yield is still very high. I mean, even in unsecured loan business, people have been earning 20, 24, 25% in microfinance and so on. Even in the supply chain financing, 12%, 15%, 18% are the existing rates of interest. So that is where we see that the decentralized finance, given that the money can move from one corner of the world to another corner of the world without any barrier. And we saw that happening right now in the war zone. Within days, within few hours, countries have been raising money from in the DeFi crypto space. So that is the thing, that if you don't have, if you can allow for a borderless flow of capital, then what happens that there is a huge equilibrium which is to be found between the yield being offered by emerging markets and yield that the capital in the global markets is looking for. And that's where we see that decentralized finance can be a huge multiplier, as well as a force to move the capital around. And that's what we are trying to build here. So we are looking to plug in those capital sources to borrowers here in India, which can be both primary borrower, or it can be secondary borrowers like even NBFCs and FinTechs who are lending down the channel. So we see that happening. Maybe.
So do you foresee regulatory challenges in terms of what you're doing right now? As long as it's within the country, perhaps not, but if it becomes cross-border, do you see regulatory challenges coming up? Given that the laws around it are pretty much unclear, not defined as of now?
So there is a way to do that properly. We have complied with all the regulations when we were doing blockchain, and we are going to do the same when we are going to do the decentralized finance. So you have vehicles in India as of today. For example, you have AIF structure possible, you have ECB structures possible, and so on, which allow movement of capital. And that is where we see that you have now Gift City in India, which allows funds to move in India as well. So the regulatory structure is in place. It is about finding the right regulatory structure and bringing that capital to India.
Excellent. Excellent. Thanks so much for that. Sonal, moving on to you. So we talked about Flipkart and what you're doing with respect to financial services. Let's talk about somebody who wants to partner with, and when I say somebody, I mean somebody from the FinTech ecosystem who wants to partner with, let's say, Flipkart, right? How do you go about it? Can you share any inputs in terms of how somebody can talk to Flipkart and go about integrating in the Flipkart ecosystem?
Sure. I think, first of all, unfortunately, it's not an open API structure. I mean, so which means that it's going to be a lengthy cycle of a strategic partnership that will have to exist between Flipkart, FinTech, or the lender, right? Because that's just how the ecosystem is built when you're really trying to ensure that the guardrails of the customer experience are safeguarded, so as to say, right? But at an overall level, we of course work with a lot of companies within the ecosystem, right? As I was earlier talking about, we work with a lot of lenders. In fact, we work very closely with Flexi loans to enable loans for our seller ecosystem, right? And the thought process there is very simple. Any partner that essentially brings onto table a capability or an ability or a technology that we ourselves do not have internally, but we feel that by partnering with them, we can actually sort of, make difference in the lives of the consumers. It could be by giving them better credit, as I think, Ram was talking about earlier, by ensuring that they understand credit. So it's not just about giving you a buy now, pay later, but actually understanding the fact that after 30 days, you have to come back and you pay back that money to the lender. What happens if you don't pay back to the lender, right? So we continue to work with a lot of partners from the perspective of education of customer. We actually work with a lot of partners to identify, and I mean, these are obviously a lot of more standard conversations, but the idea is to obviously work with partners that can help us identify risk better, that can help us and the lender collect better from the customer, right? So that's the Uber thought process. So if there is any partner that has some capability, most of the times it so happens we reach out upfront before even they reach out to us, because the idea is to obviously ensure that these 250 million odd consumers in India are well aware, are well educated, but they do have an access to credit in some form and shape available to get them started on this journey. So that's the thought process.
Great. So we are almost out of time. We just have like a few minutes. So I will take the liberty to quickly jump to some audience questions because I would really want the audience to get involved here. And so I had a lot of more questions to ask all of you, but excuse me, but we'll not be able to do that because of paucity of time. So we'll quickly jump to an audience question. And I see I have a lot of audience questions in front of me, and believe it or not, a lot of them are for Ashish. So Ashish, everybody wants to know about how you are doing stuff on blockchain. Seems like blockchain has caught everybody's fancy. So a few questions that you might want to quickly respond to. Hi Ashish, are the loans disbursed to the farmer's bank account? Do the farmers digitally sign if there are smart contracts? And are they tokenized warehouse receipts? Are they negotiable instruments? Are they somewhat like negotiable instruments? You want to quickly take that, and then we will.
Sure. I will take that very fast. Yes, they are tokenized receipts. They can be traded just like any other token. That's first part. Second part, the farmers receive the bank money in their bank account because our lending partners are the banks. So we don't, as CBDC is not in India as of yet, we are forced to use the fiat, or we are using the fiat system itself. So farmers are getting money in their bank account through our lending partners. What was the third part? Whether farmers sign the smart contract? No, farmers are usually connected to the blockchain using a DApp, but they are not using wallet technologies, so they don't sign the smart contracts. The smart contracts are used to run on the background to create a lien on favor of the banks. So that is where the smart contracts come into play.
Okay, so these are questions from Bhushan Sawant, Himal Shah, and Jyoti Sahai. Thanks, Bhushan, Himal, and Jyoti for asking those questions. And I'm getting a ticker on my right-hand side which says that I need to now absolutely conclude this conversation. So excuse me for rushing into this and concluding this, but thank you so much, everybody. This was an absolutely fascinating conversation. I mean, I'm sure everybody would have enjoyed this conversation as much I did moderating this conversation. I mean, I understood and learned so much that I did not know about, and I have been in FinTech for 8 years. So thanks a lot for those inputs. Thanks for being very candid, very upfront in terms of sharing knowledge, information, a little bit of your secret sauce with respect to your businesses. So I really appreciate that. And once again, thank you so much to all the panelists. Thank you to the audience for patiently listening in. And with this, I would like to conclude this panel conversation. Thank you once again, everybody.
Thanks, Chirag.
Thanks, Chirag.
Thank you so much, Chirag. Thank you, Ram. Thank you, Abhishek, Ashish, Sonal, for this very current and insightful discussion.
Bitcoin trading
पॉसिबल है
impossible.
लगी शर्त और हारा तो It's possible on CoinSwitch Kuber. Download करो और Bitcoin में trading start. CoinSwitch Kuber, सिक्का चमकेगा.
Cryptocurrency is an unregulated digital asset, not a legal tender and subject to market risks and price fluctuation risks.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Where there is life, there's always LIC. Zindagi ke saath bhi, zindagi ke baad bhi.